Well, good afternoon, everyone. Welcome back to the live stream. Let's see, who do we have? Okay, so far, no one. All right, I just had my, oddly enough, I did take a trade during lunch today, and it just ended up here. I had it as a 1 minute market maker buy model. Since we ended on the 1 minute because of the macro at 11:50 to 12:10, I was watching prices. It was trading lower. And so I ended up taking a long out of here and taking it up to, I think I took it to about right here, 148. Yep, so ended up taking a long right around 100 up to about 148. Closing out this macro, the 1250 to 110. And we very nearly have traded out of this fair value gap once again, like we did just before the lunch hour. We traded above, put a wick, and then crashed back down. Let's see this time if we can trade above, hold it above, and close. I'm going to switch back over to the 5 minute. We're now outside of the macro. Well, we will be in another 30 seconds, but I'm going to flip over to the 5 minute. Okay, so we did close above. I mean, we're still on the 5 minute. This is an hourly fair value gap, but it's good to see that closure there. And let's see now, what is it pushing for? Okay, 2198, I believe, is consequent encroachment of a wick on the hourly. Incorrect. Oh, wow. Good eye. All right, so we'll see that as the consequent encroachment for the wick. We'll get back down to the 5 minute and we'll see if price wants to trade up to 211. Right, Vivian, Pray and Trade, Tehran, Deborah, Laughter. Good afternoon to all of you. Deborah, you say what gave me confidence that it wouldn't turn around in the areas of consolidation, like to the. So I took longs down here, and when you say what gave me confidence it wouldn't turn around, yep, earlier in the lunch hour. Okay, let's see. Let's see. There is a consolidation. Assuming you're talking about this. So on this way up, why did I think it would turn around? So the way I saw it was that we were in a market maker buy model. So when we got the breaker here, right, we first eclipsed this high with this candle, 1228, and then we retraced back down. Once that happened, then I was looking for this high to be taken. After we traded back down, I'm sorry, this high here, these equal highs at 2111. I was looking for those to be taken next, and I saw that price will want to take liquidity here. I saw this as being liquidity because we traded up, we put a wick, and then we started trading lower. And so that's just the way I was seeing it, that we were still bullish, and that this was the next leg, and this was the liquidity point that it was going to pull from. And I put my TP a little shorter. I think it was probably somewhere around here, around 2150 or 2148, something like that. And that was the way that they approached this. We had the bullish breaker, and then I just assumed we were in the buy model and we were going to run up for liquidity at 2150. And honestly, a part of me wanted the continuation up here. So as it started trading back down and failing, sweeping lows, I saw it as going for liquidity, and I was waiting for it to return back bullish, which is what we got down here in the breaker. Oh, it's a full 30 handles above now. Yep. Another, excuse me, another thing we have. Deborah, were you on this morning when we first started around somewhere between 9:15 and 10 o'clock? Nope. Okay. No, don't worry. So this morning, one of the things that we recognize, and I think we started on the 4 hour. So down here, this was our range from this morning. So this is a 6 o'clock to 10 o'clock candle. This one candle here is on the 4 hour. And the one thing that we have here is we have a breaker, and the breaker from the 4 hour. Let me stretch it out so it's easier to see. This is the 4 hour breaker. Now it's a large range because it's 4 hour candles, but it started here at this low up to this high. Then we broke lower, then we broke higher, and we closed. And so that's what set up our breaker. That's what confirmed it. Traded back in. In fact, we traded almost to the lower end. And then we finally broke out as we were approaching 10 o'clock. We have a news event, price retraced, and then this is the continuation. This candle closes at 2. So we have a little bit longer to go here. But because of this 4 hour breaker, bullish breaker at that, you start to gain the confidence that price wants to go higher. And if price wants to go higher after trading into the breaker and then pushing higher, you expect for either this level at the close of the candle, midway up the wick, or all the way and closing above the wick. So we didn't have a midway up the wick just yet. In fact, we had barely gotten above the candle body here, but I thought it wouldn't come all the way up here and not at least want to balance out this wick here. So for that reason, that 4 hour bullish breaker had me bullish. Then if we shift down to the 1 hour, we have essentially the same thing. Let me move this out of the way. I'll show you what we have on the 1 hour. So on the 1 hour, the breaker is a little smaller and it's in a slightly different position. It's from this low to this high. Then we went lower and then we came higher and closed higher. Traded back down into the 1 hour breaker and higher. Retrace once again. Traded out. So this was the 9 o'clock candles at 10, and then we have this at 10 o'clock. Remember I said it retraced back down into the 4 hour breaker as well as the 1 hour breaker. Traded higher. And again, when you look to the left, you look for where does price want to trade to. And in a lot of cases is either to the top of the candle bodies, consequent encroachment of the wick, or completely above the wick, taking out a swing high. So that's where the liquidity points were. So another reason why I wanted to take that trade is when I saw price retracing, I was still bullish, still very bullish. And so I just showed you how we had this breaker right here on the 1 hour. Right. And this was actually from yesterday, a continuation from yesterday. And we retraced back down, then you wanted to take it higher. But if you didn't catch that one, I think Unicorn Queen pointed out another one this morning. So not only did we have this breaker that's on the hourly, but we also had this one created. Low high, lower low, higher high with a closure. Trade back down, take the bullish move up. Right, so this was the second one. So there, we just had on every higher time frame, we had everything pointing to price being bullish. And since I could see that it had not traded to anywhere in this wick, then I was still believing that that's where price was going. So all those things together allowed me to take that trade and feel confident with it. Let's get back down to the 5 minute. But yes, whenever you find that you have whatever your trade setup is, so if you like order blocks, or if you like optimal trade entry out of a Fibonacci, or whatever your trade style is, you're generally taking those entries on a smaller time frame. But if you can look on a higher time frame and find that exact same setup, then you have agreements between all the time frames with the same setup, same direction, and then you can feel pretty confident about your position that you're taking. All right, let's see how price reacts once we retrace down to 156. It's another 20 handles down. And raise to 61% here. E flat. Oh, okay. All right, EB. All right, Deborah, or any of the other new people or people without enough experience with unicorn model. If you have any other questions, just put it in the chat. There's not much up there. Sure, but let me show you something here on the higher time frame. All right, so Tehran, this is what I'm looking at on the 4 hour. All right, so right here was the bearish breaker on the 4 hour. This high to this low, you stretch that across. Right. And over here, we had a return back into that breaker. This was Friday at 10 a.m. heading into lunch and into the afternoon. So we had price pushing lower, lower, lower. Price traded all the way to it and then traded lower, back down into this fair value gap, even into this level, which started to move up. Right, so this bearish breaker sent price back down to balance this entire bullish leg. And once that leg was satisfied and it was balanced, then what did it do on the 4-hour? It then created a bullish breaker, and now it's sending price higher again. So based on that, I'm not sure we're going to see a failure. Like we're in the bearish breaker already, and we're approaching consequent encroachment. Right. We also have consequent encroachment of this wick right here, which is slightly higher, up at 213, 211. So if we don't get a reversal right here, then I'm not hopeful that we'll get one. We'll likely trade above this fair value gap. I'm sorry, above this breaker is the way I'm seeing it, just because we've already traded all the way through it. And then we went lower. We went lower by 300 handles, a little more. And so we might see it trade all the way up and through this breaker. Then we have the London high. This is from 20th, June 20th. Yep. So Tehran, what you want to do is, so our first level is at 197. The next level is at 211. And so we're on the 4-hour. So that's not a big deal. So what you want to do is look on the lower time frame, anywhere from 5 minutes and lower. And you want to find a bearish breaker creating itself if you're looking for shorts. But I would start that at 197 to 211. So it's about a 15 handle range. And anything higher, even if it trades up here, you're just looking for a bearish breaker anywhere in here. Now that we're inside of a bearish breaker on the 4-hour and it's already delivered once, instead of blindly just entering in a short, you want to look for a confirmation and get that confirmation in the same setup, get a bearish breaker, but get it on a lower time frame. And it should be setting up somewhere in here. We'll be on a lower time frame ourselves, so we may actually see it. But if not, if I were you, I would be looking on all time frames, consistently looking for a bearish breaker. We have all these bearish fair value gaps on the 1-hour. We're inside of a 4-hour bearish breaker. So there's a lot of reasons that could send price lower, but you do need the setup. While we're at a position where price is not moving that quickly, let's go ahead and take a look at our comparison chart and look at the other indices as well as the dollar. All right, so here we are on the US dollar. We had a break of the low here on this move down. We had a retest back in with the wick, rejected, closed below. So that's showing that price looks like it wants to go lower for the dollar. And because of that, we will look for continued longs on the indices. But we want to continue to monitor the dollar and make sure this is actually happening. So we want to see this low right here swept 105.712. We want to see price get below that. And if we do see anything move higher, we want to see these bearish fair value gaps reject price lower. So we don't want to see sustained bullish momentum and runs from the dollar based on what we see from price action. All right, so that being said, that means we're looking for longs on indices. You can see where price may want to go on each one. We've already swept these equal highs on S&P. Took it, rejected back lower, came out of lunch, pushing higher, just like what we see in Nasdaq. Swept this high. Up next, it will be the fair value gap up here at 55.51. So let's see how price reacts once it gets there. For anyone trading ES, 55.51. And then as we look at Nasdaq, okay, here on Nasdaq, yeah, we want to pay attention when we get to 210, 211. When we get to 210, 211, we want to see how price reacts at that point. Hopefully we can get a push all the way up until we get to this fair value gap at 240. And then we'll see what happens there. But the first level to pay attention to is 210, 211. Just see how price reacts once it makes there. Here we got another leg of expansion here. Right? Another leg of expansion. Now we're getting consolidation sideways. So from there, we would expect price to continue higher. After the expansion, we would either get consolidation or we would get some sort of reversal retracement. And it looks like we're going to get the consolidation. Now what may happen is you may see a sharp move lower, sweeping this low, and then a move higher. But either way, I'm expecting higher prices. Okay, we're in a macro now. It's been a couple minutes. Let's switch now to the 1 minute. It's up close to that candle. It's this size until the last second, and then it expanded. That 211 level that we were looking for to see how price wants to react once it got there. We've already passed consequent encroachment of the bearish breaker. Remember, that's on the 4-hour. Just put that up here. All right, 2 o'clock. For all silver bullet traders, it's 2 o'clock. Appreciate it, JR. Yeah. get everyone in the room right now to do me a huge favor and support the channel and hit the like button. I also want to make sure that anyone who's brand new and just discovered the channel has subscribed already. So make sure you also subscribe. Don't leave without doing so. I'm not sure how YouTube is using the algorithm to promote the channel, but it may not be easy to find if this is your first time here. Oh, okay. All right, my lad. 100 points above the range. Oh, 98. Look at you, Robin. Congrats. Congratulations. I almost would have had another one if I had taken the long here. I was tempted to, and I hesitated and I didn't get in, so I wasn't able to catch it. But yeah, it looks like it would have delivered 35 handles I would have been looking for. Okay, stock, are you looking for an entry? Okay. So far, we haven't had any retracements. So on a heavily bullish day like this, you need to find a retracement to get in on. And the last one we had was this one here at 135. Oh, really? That's great to hear, Robin. I don't have a problem pointing out what I see on the screen. In fact, I'm purposely pointing out what I see on the screen just so people know what I'm thinking about or how I'm thinking. But what I love most is when people take what I'm showing and they apply it and they force themselves to learn it, and they want to be able to fish, not just eat what I catch. So you're the you're the ideal student per se. So it's great to see the progress. Great to see you're passing these evaluations, and I hope that you continue to have more success. It looks like price is still heavily bullish. Not really a lot of retracements to speak about. And so we'll continue pushing until we see another fair value gap. So I'm looking now at 241 and a half, and we'll see how price responds when it gets there. Right. So if we go back to looking at where we were, we can see a bearish candle here on the dollar hasn't quite taken out that low I want to see it trade to. I want to see it trade out of this bullish fair value gap and trade lower, hopefully closing lower after the hour is complete. But because I'm expecting dollar to press lower, I'm expecting all the indices to press higher. And so far, that is what we're getting this afternoon. So everything's looking good. And we just haven't had any pullbacks for anyone looking for an entry. You need it to be in already. And but if something presents itself and we do get a pullback or something, I'll let you guys know. And also, while we have some time, let's just look at what we are expecting tomorrow as far as news. We have the NFP from ADP, which is a smaller version of the report of non-farm payroll change that comes at 8:15. Unemployment claims will come at 8:30. Then we have ISM services PMI at 10. Whoa, FOMC meeting minutes at 2. Holy cow. But at 2, I thought people said that the trading will stop at 11 or 12. Anyway, as you can see, tomorrow morning is going to be full of volatility all over the place. But you still want to be careful because there's so many high impact news drivers coming 8:15, 8:30, 10 o'clock. So the morning is going to be littered with that. And that's not even to mention, we still have the opening bell at 9:30. So it's going to be hard to navigate, but we will do so. Even as a news event at 10. So you want to wait 15 and 30 minutes before you jump in. So maybe 10:30 might be our only opportunity outside of maybe a 9 o'clock pre-market entry if we see something between 9 and 9:30. So that's what we got tomorrow. Yeah, for anyone new in the room or anyone struggling with breaker setups, or and you want to understand them better, or you just don't understand exactly what's happening on the screen sometimes when I'm drawing these boxes as they appear, make sure you're asking questions in the chat. Be extremely active. That's the only way that you can learn, or that's the quickest way that you can learn. As you can see, Robin just mentioned that she passed some evaluations today, and she's been one of the more active participants in the chat, asking questions about where breakers are set up, testing out some that she thinks she sees, and just asking for confirmation, just building up that confidence that she can then trade on her own. And so I challenge all of you to do the same. If there are any questions that you have, or anything that doesn't look quite right on the screen, or something that I said that didn't resonate with you, make sure you ask the question so we can clear those up and get you moving in the right direction as quickly as possible. Yep, we are getting a small pullback here. Oh, you're in long, Mark? Okay. Good luck on your open position. Have you been in long for a while, or you just recently get in? All right, I'm just looking to see if maybe this is going to be our silver bullet entry for continued long. Just got back in, tight stop. Okay. All right, Mark. Good luck to you as well. Let's see, where are we? Yep. Let's see, Jay's stock. I know you said you were looking for an entry. Go ahead and drop this up here now. Now we have a 5-minute fair value gap, which could be our silver bullet entry. We also have, for this last leg up, this last expansion leg, the dealing range takes us to discount pricing at 21.96, also inside of this 5-minute fair value gap. So that's where I'm looking for price to retrace to for continuation. But we'll see. We'll see if that happens. I mean, it could just carry on higher and not allow anyone to jump in. But I'm hoping that it does trade a little bit lower and allow the silver bullet as well as a discounted price entry. We are possibly heavily bullish here. All right, so here on the 1 minute, I'm just following market structure to see when do we have a market structure shift potentially, and it's down at 210. So we keep making these higher highs, higher lows. Here we basically have an equal low because it didn't close below this one here. We have a wick, but not a body. So now we'll see whether we get a failure before this high and price crashes lower, or whether we get a trade higher than that and it's like this. And in that case, you're just continuing the trend. But so far, all lows have been protected. So I have this line here. If we get a closure below in the 1 minute, then we'll look and see if price wants to be bearish or if it's just a liquidity grab. Oh, DC, welcome. Good to have you. I'm not sure if you were on a little bit earlier, but I let everyone know. Please don't be shy. If you have any questions, throw it in the chat. Make sure you ask them. We all have some things that we can learn. We're all still students, even though some of us are a bit more advanced than others. But yeah, if you have any questions, make sure you ask it. Let's get everybody moving closer towards their goal as quickly as possible. 5 contracts stopped out on the previous 1 minute candle. Okay. All right. What's your entry model, DC? Oh, I'm sorry, Mark. Hmm. Actually, that's probably not a bad idea that you got stopped out. Looks like we might be looking for lower prices. Let me just take a look at the 1 minute here. All right, so we had a failure swing here. It failed to make a new high after coming down and making equal lows. Failed to make a new high. Let's see if now this candle can do that. It's almost there. Hmm. All right. Do we sweep this low or the high first? This low or this high? All right. So we took the high first. That shows a willingness to continue. We'll play that game one more time. This high or this low? So now we got the low first without taking out the high. All right, let's see if it leaves a fair value gap here. Doesn't look like it's large enough, but we'll see. All right, now we need this candle to push lower, breaking this low down at 210. If we're going to look for some sort of bearish movement here. Looks like it's not going to leave a fair value gap. All right, so what's happening now is it trapping shorts. Two- 222. Okay, that's not terrible. Mark, yeah, way to grab 12 points out of the market right there. 243. Okay. Mm-hmm. The consolidation zone. All right, I drew up this bearish breaker here on the 1 minute to see if it would amount to anything or do anything, but so far we're just in a consolidation range. So I'm going to go ahead and drop this as a potential PD array. And if something happens, we can always come back to it. But right now I wouldn't be taking an entry off of it. Getting back into it. So I threw it back up there only because I'm also going to draw this one. So with both of these here, I may not take that one, but if we trade below and close below this one, then I may be interested in taking that. And it's pretty close. Again, it's all inside of the 4-hour breaker. That's the size of the screen. That every phone call I needed to take. See, we're still inside of this 20 point range. Oh, no, we are not any longer. It's funny how it always happens like that. As soon as you start talking about it, things change. And what that's really doing is making sure that these bearish breakers are not confirmed. Let's see if we get a closure above. Okay, let's go ahead and delete these. Right, I had them up on the screen just in case price broke lower and we closed below, then we would have those bearish breakers to trade back into it and go lower. But that didn't happen. What happened is we actually got a continuation higher. And even if you look at the way the breaker is structured, you got your low to your high here. You got a little wick below. And now we got a closure above. So now you got another continuation breaker here. Hey, Ray, what's up? Good afternoon. Four-hour fair value gap, will it hold? Oh, are you talking about the 4-hour fair value gap that's going to be confirmed at the closure of today? We still have 2 hours left on the 4-hour candle, and once that candle closes, then we'll have a fair value gap. But as of right now, we don't have a fair value gap confirmed. We could turn around and start selling off down to 20,100, and then we won't have a fair value gap. So right now, the fair value gap's not confirmed. But do I think price will trade through it? I do not think it'll trade through it unless things turn around when we get to around 275. But honestly, I don't see that either, because if we get to 275, you're talking about we've already traded above the 4-hour bearish breaker. So then I don't see why price would want to turn around and be bearish at that point. Side of the macro. So we have till 310, 250 until 310 will be here. It didn't hold, but it looks so good. 11:15 breaker. DC Trader. Which time frame is that, on the 5-minute or is it the 15? Oh, I see what you're saying. I see it now. $243. Okay. Yeah, I would look for some sort of bearish entry model inside of this hourly fair value gap. That's what I would be looking for if I was looking for a short. Sitting at the top of last Friday's high. Okay, let me check on that. Friday's high. Okay. I don't see it. Give me, what's the 4-hour candle? Which was the exact one? You said the Friday high. Friday's high had, I guess, the 2 a.m. candle. Is that the one you're talking about? And this is for NJ Pro. Is it the 2 a.m. candle? Yep. Yes, Robin, I'm here tomorrow. Sorry, I'm just now catching your question. I am here tomorrow. I'm here for the rest of the week. We have one session tomorrow, which is the morning. I guess the markets are closed in the afternoon. And then we have the holiday on Thursday. So hope everyone has a good Independence Day, and then we'll be back for Friday for a full session. Showing up on the 1 minute and 5 minute chart. Okay, that's weird. It shouldn't happen like that. 2273 to 10 a.m. candle. Oh, you know what? I'm so sorry, NJ. I was looking at the Friday before, the 21st. Sorry about that. I see what you're talking about now. All right, so let me find the bearish breaker here. All right, so whenever we put it on the 4 hour, and this is for NJ. Yep, NJ Pro. That I think the 4 hour fair value gap would hold. All right, so you must be talking about this right here. There you go. There's a good chance for it to hold. Is one thing we have is we've already traded the consequent encroachment of that fair value gap already. So on the next push inside, we likely will eclipse this high. So we'll likely go to the top edge of this. Now it could fail from there and push lower. But generally what happens is once you pass that consequent encroachment threshold, you are able to trade through. So on this time frame, just on the 4 hour time frame here, right? So this is the breaker, the 4 hour breaker that we're inside of right now. So I'm not saying it won't do this, but I would find it, I'd struggle to be confident in a short setup that trades above a 4 hour bearish breaker and then into a fair value gap to continue lower. I would assume that it would get in somewhere in here when it's still inside of the breaker, but also inside of the fair value gap, and then trade lower. But yeah, if it makes it up here, I wouldn't have a lot of confidence there. If it makes it up there, then what I would focus on next is this area. So I would look at these wicks, and 50% being 348. So 350 would be my number. And I'd look for shorts there. Now it looks like this is a 15-minute bearish breaker that I have from Thursday, June 20th. Now that may be an area to pay attention to. That's at 319. That's a 15-minute breaker. 4-hour breaker. Thursday, 10 p.m. Bearish breaker, I'm assuming. You saw that as a bearish breaker. It is, but it obviously, like this is how you would have set it up. This high to this low, trading higher, trading lower. Only thing I don't like about that is this candle, which traded higher and lower. And then you had the next candle higher and lower. So for that reason, I don't like this little cluster here as being the breaker. And on top of that, it's butted up against another 4-hour bearish breaker. So just use the one that was here since June 18th. Right? But if you really do want to use this, then I would say maybe drop time frames and try to find it where it's cleaner and something you can use. So let me just see if we can do that. So let's go down to the 1 hour. All right, so here it is from this high to this low. Even if we extend it here. And then again, so it poked higher, and then the next candle came and traded lower and closed. And this is on the 1 hour, so not the 4 hour, but on the 1 hour. So this confirmed a bearish breaker. And then the following candle traded above and closed above it. And then the next candle, which was probably a news event at 10, traded well above it, which would make this nothing essentially. Definitely not a breaker at all. So that's one way to check it. If you grab a setup that you think is a breaker but it looks okay but not great, and you're looking for something that's cleaner, drop your time frame, try to find one cleaner with a few more candles, and then in this case it shows that it's invalidated, so you shouldn't even consider this as a bearish breaker. However, this 4 hour, it traded all the way to the top and failed, came all the way back down. So then this would have been the 4 hour breaker you would have used. Traded below, closed, and you would have waited for it to come back, which it never did. And so therefore there was no entry there outside of a market execution. Right, looks like the only winner from this 4 hour bearish breaker would have been here. 11 o'clock this morning, traded in and then traded lower about 50, 60 handles, and that would have been the only winner for this breaker. All right, that was good though. Don't be afraid to put yourself out there and say, hey, this is what I'm looking at. This is what I'm thinking. That was good. See you tomorrow. Yep. All right, Laban Ali. We'll catch you next time. Why do I call it a 4 hour? Where do I get the 4 hour? On the 4 hour chart, which is here. From this high to this low. Right, high, low, higher high, lower low. Closure. Traded back in over here. And then lower. Let me put this towards the right hand side. Yep. I do foresee movement during the news tomorrow. News is what we need to get price moving. For impulsive moves that will run for 50, 75, 100, 200 points, you generally need some high impact news. Otherwise, you get a little slow price action that takes several hours to move 50 handles. Barber Light. I do use trend lines sometimes. If I see a trend, I will put a trend line up just to see when it breaks that trend, so then I can know to expect something different than what I've been seeing. But outside of that, I don't really use trend lines that much. Let's see. So Mark, you asked me why did I have this as the 4 hour. I know now you're clear on where the 4 hour came from. But what I like to do is I like to keep these higher time frames on my screen. So whether it's a 1 hour, all my fair value gaps are 1 hour, and you're not seeing them here because I'm on the 4 hour chart. So whenever I get above the 1 hour, it doesn't show my fair value gaps. But let me drop back down. All right, so now I'm back on the 1 hour. So these fair value gaps you see, all of these are on the hour. So these green ones, even these pink ones above. And so that's how I kind of figure out where price is and where it's going based on these 1 hour PD arrays there. Now I may be trading on a 5 minute, I may be trading on a 1 minute, but I'm still looking at my fair value gaps from the 1 hour. I'm looking at my breakers from all time frames. But I like to frame price movement from the higher time frames. Just like down here from this morning where we were, I pointed out that we had a 4 hour bullish breaker, and then we had two 1 hour bullish breakers inside of the 4 hour. And so then we could even go down to smaller time frames, and we found this breaker in this little square on the 5 minute, I think. Yep, on the 5 minute. So the 4 hour and the 1 hour bullish breakers told us that we were going higher, and the 5 minute bullish breaker told us that this area right here would be a good entry. And so that's how I looked at price this morning. Okay. Mm-hmm. Yeah. So J stock for me, what I look for is I look for any swing highs that have not been traded back to, and that's where I'm looking for price to come. And then from there, then you can look for a nice entry. So in this case, this swing high right here was traded higher and above at 105. And even though we had a retracement, it didn't come back and touch that level. So I am looking for price to trade down to 156. And then from there, we can look and see if there's an entry to take. Now, it may only trade down to 156 when it's bearish and it's trading all the way down. That may happen. And if that happens, then, there's no trade. And well, what can you do? You just wait for the next setup. But that's what I'm looking at, and that's what I'm hoping that price wants to do. We have another one here. So it could possibly trade to 188 and then become bullish again. I like having the fair value gap right above it too, because it can dip into here, put a wick on top of 188, keep its body inside the fair value gap, and then trade higher from there. And so we have now finished our macro here. The next macro will be at the end of the hour, so 350 to 410, and that'll close out our day for us. Another thing we need to pay attention to is that we are getting really close to the weekly high from last week. The weekly high is at 273. And so let's put that on the chart. Right at consequent encroachment too. Okay, right at consequent encroachment of this 4 hour. There we go. RPG, what's up? Good afternoon. All right, I'm just counting how many legs we have here, expansion legs. Yeah, it looks like we have 1 and 2 and now 3. We haven't gotten an official pullback down to this level like I was looking for earlier, so we could see price push a little higher. Maybe the previous week's high. Maybe that's what we'll close out today, taking the previous week's high, and then maybe that'll set us up for some shorts for the rest of the week. I'm not really sure at the moment, but we'll figure that out. But I am intrigued because we're so close to the previous week's high, and we've completed 3 legs of expansion. So you never know when it's going to turn around and start to push lower. Not to mention we have more, still basically consolidating the same way we were at 2 o'clock. Even though it showed a little bullish momentum, it quickly came right back down into the range. So we haven't really done a whole lot in the last 90 minutes. And so that's another thing. Like, I was looking for the expansion legs to see when we may turn around. Now, seeing we've gotten 3 expansion legs, we're still consolidating. So my guess is this one expansion leg might continue to still be the same leg until it wants to turn around and reverse. It's nice to see the candle body sitting right around consequent encroachment there and not looking to push too far to the downside. And that's a good sign for bullish momentum to continue. You know, a lot of action going on. Do we have any other questions that someone in the room has been burning and itching to ask? Go ahead and put it in the chat now. Okay, Nick. I'm okay with order blocks, Nick. Um, I wouldn't say that it's my primary focus when I'm looking at the charts. I prefer the breakers, and a breaker is really just a failed order block. So I guess they're kind of one and the same. But yeah, I recognize that order blocks are really important, especially for a smart money concept. I got most of my education from ICT, so it's going to be the same lingo that he uses, as well as the same way he does his charts. So order blocks are quite important to order flow. I just don't use them for entries. That's all. Okay. Yep. I see it. The 4 hour order block. Definitely there. Appreciate you pointing that out, DC. All right. Let's see if this bullish breaker does anything. I don't generally like opposite breakers inside of one another, whereas this is 5 minute bullish breaker inside of a 4 hour bearish breaker, this whole blue area. But the reason why I'm okay with it is I know I mentioned earlier, but I'll say it again. On this side, when price traded up on Friday, it traded all the way through the breaker. Um, so for that reason, there's a chance that this breaker could fail this go around and not hold price below and just let price trade all the way through it. So I'm okay with a bullish breaker being formed inside of a larger bearish breaker. Oh, 917. Oh, okay, DC. Wow. Oh, that's why you said what she was still holding from 917. Okay. Oh man, yeah, you'll be up 300 handles right now. That was nice. That 917 level, you also had the 4 hour fair value gap sitting right there to support your bullish sentiment. Yep, that was a very nice entry there. pretty aggressive there, but we got over 30 minutes. It's possible. All right, let's shift this up. Oh, I'm sorry. Need to move this down. SMT. Let's see. We did have SMT earlier, I believe. Which also gave us an indication that we were going to be bullish. We had that at 7 a.m. this morning. So if we shift up to the 1 hour, actually, you know what? We'll just look at this chart here. Get rid of the picture there. All right, so if we just look at the 7 a.m. candle on the different indices, so this is what we look like on the Dow. You can see we swept this low right here at 7 a.m. Then if we move over to S&P, we put the 7 a.m. candle down, we can see that we swept this low over here. Then we come in and we look at Nasdaq and we say the 7 a.m. candle. And I mean, yes, we swept this low here, but we have this low that's down here that we didn't trade to. Which is the one that was swept on S&P. That's the one that was swept on S&P. We did not sweep that here. So whereas these S&P and the Dow took liquidity, and as soon as they took liquidity, they became bullish, pushing higher. And then we saw the exact same bullish momentum over here on Nasdaq without taking liquidity, showing the bullish strength of Nasdaq. But outside of that, I generally only check for S&T on a 1 hour. So if it happens on a smaller time frame, I'm most likely going to miss it. But we can see all three indices bullish. Well, I take that back. Looks like we're a little bearish here on Nasdaq so far. Small range, but the candle itself is bearish at the moment. Bullish on S&P, bullish on the Dow, pushing lower, bearish on the dollar. So let's see if Nasdaq can turn around and start pushing higher before, well, in the next 10 minutes when we start the macro. All right. $204. Let's see if maybe it pushes to 204 because this is a bullish fair value gap on the hourly that was just confirmed last hour. Deborah, the 5 minute or sometimes the 3 minute, sometimes the 1 minute. It just depends. But the 5 minute is sort of a medium threshold that I like to hold if I can. I can find things on a 5 minute. They typically hold a little better than the ones on the lower time frame. So if I can find a breaker on the 5, that's my preference. Hey, we're almost at 3:45. Another 5 minutes and we'll be in the macro. We'll start our 350 to 410 macro. I generally DC, I generally take 1 to 2. Yeah, I'm not the type of trader that jumps into every price swing that I see that moves 20, 30 handles. I don't try to get in those. I try to find setups that are based on the 5 minute breaker if I can find it. And generally you'll get maybe one of those per session. Yeah, I use the breaker unicorn setup mostly. Sometimes I'll use a change in state of delivery, market structure shift, that kind of thing. But for the most part, I try to take breaker unicorn entries. Um, no, I'm not really that good at turtle soups, DC. So I haven't. I can't say that I trade a turtle soup. But maybe that's what happens with my change in state of delivery. Maybe those are actually turtle soups. And I'm taking an entry based on the impulse candle. But it's actually coming from a turtle soup from a session high or low. So I guess those are pretty much the same thing. So no worries. No, don't worry, DC. If you have any questions, throw them in the chat. Let's make sure we get them covered. It might spark a good conversation that maybe someone else needs to hear as well. Yeah, we got 20 minutes left. So any final questions, make sure they're in the chat so we can go ahead and talk about them. right, so price has made us wait all the way from 2 o'clock to 3:50 in this same range right here to see where it wants to go. I have predicted it's going to go higher, and I reserve the right to be wrong, but let's see what happens. About 10 seconds before the macro starts. Let me put it on the 1 minute. Part of my reason for it to go long is we've been heavily bullish all day. We just came off of the last expansion leg and then consolidated. And also the previous week's high is at 273, about 50, 60 handles away from us, which is within range for 20 minutes. So all of those together leads me to believe we're going to be bullish still. And we're also still selling off on the US dollar. So let's hope that continues and we see higher prices. But if you're bearish and you see a bearish setup, by all means, carry on with your trading style. Any input on a CBDR? CB. What does CB stand for? I know dealing range, but what's CB? Oh, central bank dealing range. Oh, yeah. I guess I don't know too much about it. I know I've heard of it. I heard ICT mention it, but it's probably not a lot of that mixed into my trading style. Okay. Thank you for that, Billy. So I guess the central bank dealing range is more for currencies. DC, are you referring to the central bank dealing range? Yep. Correct. Excellent. Yep. Well, maybe, yeah, DC. I think one of the reasons why maybe it's not part of my trading plan is, there's only so much you can incorporate into a trading plan before you get paralyzed and you can't move. And so for now, I feel like I have enough mixed in where I feel like I can see to a certain degree where a price is going next and draw on liquidity and then follow price action. And so I'm trying not to throw too many more tools in the toolbox for fear of it being too heavy to carry. That makes sense, Luke. Yeah, the dealing range of impacting the dollar, which then has a direct impact on indices. Okay. All right, for anyone who jumped in on this setup, taking a long at 220, you should be up 15 handles now. All right, we got equal highs here. Want to see price tear through at 240. Which now becomes triple highs. All right, if we see it go lower, let's see if it trades out of this fair value gap right here. I'll go ahead and mark that up. I know it's probably hard to see. Maybe see if I can make it larger. All right, all three indices trading at their daily high, dollar trading at its daily low. Good to have all those in agreement with one another. All right, there's 25 points delivered, 25 handles for anyone taking that entry at 220. I know I'd have it marked up here as a 55 point trade, 53 handles. Half of that's already delivered. Took it to the equal highs. That was smart, Kim. Low hanging fruit. Grab 20 handles and then jump out. It is 3:57, so time is of the essence. Got about 13 minutes left for Topstep traders. Apex traders can continue to trade until just before 5 o'clock. All right, there's 30 handles. All right, made it up to 35 handles delivered so far. All right, JR. Catch you tomorrow. Take care. All right. So this wick down about halfway is this 2240 level, which was the equal highs that it traded above. So on its way down, let's see if it wants to just retest that level at 240. I haven't touched 240. So let's wait for just another moment to see what happens. All right, so there's a test of this level 240. Let's see now what happens. I didn't have a spring to the upside yet. I'm looking for something like a strong move to the upside, not just a casual candle that's moving. That's a bullish candle. I'm looking for speed. We're already past 4 o'clock. So we tapped the level, the past 2 candles. Mm. Yeah, no impulse back to the upside. So that 39 handle move to the upside might be all we get this afternoon. From 220 up to 259. $238. All right, looks like price is now creating the wick on the daily candle, coming off of the high of the day. So far about 20 handles, creating an up wick. Yep. Any final questions or comments, make sure it's in the chat. Anyone who's dropping now and leaving, carry on with your day. Thanks for joining. Glad that you were able to make it today and help us out on the live trading that we're having. And also, just remember, we'll be back tomorrow morning, 9:15. Tomorrow is just a morning session. And then on Friday, we'll resume with the morning and afternoon session. Please support the channel on your way out. Make sure that you click the like button, the thumbs up. Make sure that YouTube understands that you're appreciating the content. And also, if you're brand new, make sure that you subscribe. Don't get left behind. Don't miss out on any live streams. This is the summer, so there are vacations. Things happen to where we're not streaming. But you want to make sure that when we are streaming, that you know about it. And so if you subscribe and you have the notification on, every morning and afternoon when we go live, you'll get a notification from YouTube letting you know that we're live and you can jump on. Yeah, so it looks like price had one more expansion leg in him. I was looking earlier and I saw this as the third expansion leg, and I saw we were consolidating, and I figured that we'd still go higher, but that we would sweep a low to get there, and all of that came true. We swept a low right at the macro starting at 350. We pushed higher. We did not make it to the previous week's high, so that was still leaves a little bit to be desired a little later when we reopen at 1800. either overnight or sometime tomorrow morning. Maybe we'll take that previous week's high. But yeah, pretty good day, I would say. So again, thank you all for joining. We have exhausted our time this afternoon, and we're back tomorrow morning. Hope to see you there. All right, everyone. Take care. See you tomorrow. Oh, Loot. Sorry, Loot. I will be here tomorrow. I'm here.